Good afternoon, good morning, everyone, and welcome to this OMFIF session, jointly hosted today with our partners DBS of Singapore on the future for multilateralism and the role of development banks. There's plenty to talk about, of course, with questions hanging over the optimal financial structure of these institutions even before COVID, which has gone on to strain the economies of developed and developing economies alike. There are numerous very taxing geopolitical issues, needless to say, which may mean that the global multilateral order possibly might already have had its heyday. Equally, it might not. COP26 showed that all serious countries understand the challenges posed by climate change and that they're prepared to work together on it when it really counts. Technological innovation in finance is bringing new potential as well to sustainable investing and financial inclusion, and is very much a global discussion too, which OMFIF is proud to be heavily involved in as well. So please do join in as well as we go. I'm very happy to ask your questions to our panelists. Please put them in the chat function as they occur to you, and I'll slot them into our conversation. We've got a great panel for you today of really excellent representatives from MDBs to talk about these issues. We've got with us Tamer Baig, who is Managing Director, Chief Economist, Group Research at DBS. We have Jonathan Grosvenor, Assistant Treasurer and Head of Client Solutions at the Asian Development Bank. We have Leslie Marsdorp, who's Chief Financial Officer at New Development Bank. We have Isabelle Laurent, who is Deputy Treasurer and Head of Funding at the EBRD. And we have Domenico Nardelli, who's Treasurer at the Asian Infrastructure Investment Bank. Firstly, though, we're going to hear from Simon Ong, who is head of the Financial Institutions Group at DBS Bank and has an interesting tour of the horizon for us before we get into the issues in more detail. So Simon, over to you.
Thanks, John. Very good afternoon and a warm welcome to everyone tuning in here from Singapore. I'm Simon Ong, head of the Financial Institutions Group here at DBS Bank, and I'd like to welcome you all to this conversation today on the future of multilateralism and the role for development banks. The past few years have been extremely challenging on the global economy, as we know. And last year, we started to see some global rebound and recovery, only to then be faced with a new set of unfortunate challenges and circumstances, from the war in Ukraine to the tightening COVID-related restrictions in China, rising energy prices and inflation and interest rates, all adding new risks and uncertainties and strains to the economic recovery, both globally and regionally. So we're entering 2022 on a weaker footing. Global growth is expected to moderate from 5.9% last year to 4.4% this year. But despite these uncertainties, there are bright areas. And seemingly Asia, hopefully leading the charge. The Asia Development Bank is forecasting 5.2% this year for growth and 5.3% next year. But in Asia, the growth is uneven, and the pickup in Southeast Asia, we're seeing as economies learn to live with the virus and to reopen their borders. South Asia remains strong, but to moderation in East Asia, with all eyes on the situation in China. At DBS, we believe our efforts have helped to support our clients through this challenging period, and we'll continue to support them in the years to come. As a leading Asian bank with strengths in transaction banking, in treasury and in capital markets, we're deeply embedded in our core markets in Singapore, Indonesia, and India, in China, Hong Kong, and Taiwan. And we leverage our strengths in these core markets to also serve our clients in other parts of Asia, be it in Korea or Japan, Vietnam or Malaysia, and other parts of the world. We continuously track global events and trends, and as the world is evolving, so must we. And in the last decade, we focused heavily on digital technologies, investing in blockchain, artificial intelligence and machine learning, building up our digital capabilities to better serve our clients and also to make sure we're at the forefront of innovation. I think the COVID-19 pandemic showed these efforts were well placed, and we were able to position ourselves to confront those challenges and be at the forefront of digital acceleration in financial services. And we continue to invest heavily in technology to maintain our competitiveness and to deliver solutions. I'd like to just highlight several businesses that we've launched recently. The first is our digital exchange, or DDEX, which is an integrated ecosystem embracing new digital asset classes and includes trading and custody. Last year, our trading values exceeded $1 billion and continues to grow. In October, we launched Partior, which is a blockchain-based cross-border clearing and settlement system designed to revolutionize the efficiency of payments across the banking industry. We also launched CIX, or Climate Impact X, which is designed to be a leading global exchange and marketplace for carbon credits, and recently launched our Project Marketplace, which is a digital platform for buying, selling, and comparing carbon credits. Sustainability is an important priority for our customers and for us here at DBS, and we aim to be a champion of sustainability goals. We also launched Fixed Income Execution, or FIX Marketplace, which is the first fully digital and automated fixed income execution platform, with 20 successful issuances last year, aggregating to about 4 billion notional value. So to recover from the global pandemic and other uncertainties, we believe multilateral institutions, as well as banks, have a significant role to play in supporting economic growth in a sustainable way. At DBS, for instance, we're fully committed to sustainable banking and to having greener portfolios. We believe that climate change is a key priority for both the world and for us to tackle. We're proud to be the first Singapore bank and among the first 100 banks in the world to have signed up to the United Nations Net Zero Banking Alliance, which committed to align our lending portfolios to net zero emissions by 2050. We're very excited here at DBS to be sponsoring today's panel, and which is part of our official institutions dedicated coverage for sovereign wealth funds, multilateral development banks, and central banks. And we believe that today's discussion will be very fruitful and engaging. I very much look forward to hear the insights from our expert panelists today. Thank you all for listening. Hand back to John. John, I think you're on mute.
After 2 years as well. So thank you very much, Simon, and it's great to have you with us supporting this very important discussion. A quick question for you before I turn to our panel. You've touched on a number of key intersecting areas that we're going to explore. In particular, OMFIF is very interested in the interplay between the digital money revolution, which we spend a lot of time on, and the sustainable revolution equally. In the context of a big demand for capital for sustainable finance, particularly in emerging markets as well, a number of those, of course, in Asia, and it's the job of MDBs to support and foster those. How do you see DLT innovations, where Singapore has been a leading player in the world, supporting sustainable investing?
Yeah, so as I mentioned, we've invested heavily in blockchain technology, distributed ledger technology. And really, we see that DLT is going to become embedded within financial infrastructure. Two key areas, I think, is going to be payments, and the other in financing. And really, the investments that we've made in our digital exchange, digital asset exchange, as well as Partior, our blockchain-enabled cross-border payments system, is really to kind of capitalize on that trend. So I think DLT is going to be instrumental to financing in general, and sustainable financing as a key part of that, and create more transparency, more trust through the use of blockchain and smart contracts.
Thank you, Simon. And certainly we've heard in some of our other sessions that maybe DLT can help solve some of the conundrums about matching up taxonomies, use of proceeds and so on, and the flow of information from that through to investors. So we'll follow that with great interest. Thank you. I'd like to turn to our panelists now. We've heard from Simon a huge number of areas that your institutions bravely need to engage with in a world dramatically in flux at the moment. So I'd like to ask each of you in turn first what you think your own institution's #1 priority is right now of all these difficult challenges. So Isabel, perhaps I would start with you. What's the EBRD's top priority of many important ones? You're also on mute. Snap.
Even after all this time.
Exactly.
I think that with the war on Ukraine, inevitably at the heart of the EBRD countries of operations, the effect of that not only on Ukraine, but also in terms of energy and food prices on our countries of operations, because they're going to suffer more than even the developed markets, given that households spend more on those kinds of aspects than do others in more developed markets.
Okay, well, that's a good start. Tamer, what about what would you say for these institutions of these priorities? Which one would you pick first for them?
I'll focus on something very short term, but it has implications for debt sustainability and country risk in a broader sense of the matter. The very near-term concern right now is the tension in the interest rate market spilling over into the FX market. What you have is a number of countries promising to keep rates low. China and Japan come to mind before everybody else. And as a result, their exchange rates are facing tremendous volatility. And this volatility is dragging down exchange rates all over the world at a time when weak exchange rate is a major threat as far as pass-through of inflationary pressures is concerned. So we are looking at this development with some degree of concern, because it not only has implication for countries that are facing exchange rate depreciation pass-through into their domestic prices, but also for the debt market in general. The stability of exchange rate and interest rates together are critical for emerging markets in particular to have a relatively sound 2022. That would be turned upside down if the kind of volatility that we've seen in the last 4 to 6 weeks were to continue.
Of course, as you're suggesting, a lot of countries don't borrow in their own currency, so there are special risks there. Well, I'm sure we'll come on to debt sustainability, which is being made difficult also for developed markets because of COVID. So we'll explore that. Thank you, Tamer. Jonathan, your institution is headquartered in a developed country with developing countries nearby. What would you see as the priority for ADB at the moment?
Morning, John and everybody. And first of all, may I thank OMFIF and DBS for the kind invitation to appear and discuss on this panel today. And may I start by just correcting you, we're actually headquartered in a developing country with developing countries around us, mostly because, of course, we're headquartered in Manila in the Philippines, with offices throughout Asia and the Pacific. To answer your question about what occupies our priorities at the moment, and I'm bearing in mind that you told us we could only answer in the singular. It's so difficult to answer in the singular because there are many priorities, but what has occupied Asian Development Bank for the last 2 years, of course, has been our COVID response. And all of the multilateral institutions that you have participating in the panel today serve different parts of the economy or different mixes of the economy, public sector, private sector, and mixes in between. ADB is mostly focused on the public sector. And so we've provided $20 billion of budgetary support to our members over the last 2 years. In addition to our regular lending programs, and a further $9 billion of vaccine financing, which was not just buying and sourcing the vaccines, but also helping those countries to deliver to the cold storage and the delivery of those vaccines to their populations. And sadly, we're not yet out of COVID. Okay, in health terms, we are progressing apparently in most countries quite well, but the economic effects of COVID are still being felt. And I dare say we'll come back to this later, compounded now by the war in Ukraine. Back to you.
Thank you, Jonathan. Thanks for the correction. My apologies. I was thinking more of sponsorship than the headquarters, and we'll come back to that theme as well. So thank you for that. Domenico, over to you, please.
Thank you. Thanks, John. For us, again, it's difficult to single out one priority only, given the difficult situation that we are in. But I would say that for us, one of the priorities has been how we continue to work to support all of our members, including low-income countries. We are seeing the developments in interest rates, And we know, and particularly the IMF and the World Bank have said that there is going to be a massive debt sustainability problem ahead of us. So we as AIB, we don't have like a soft window as some other MDBs do, but we have just approved a replenishment of the special fund window, what we call, which is basically an assistance, a financial assistance to our low-income members to when we extend loans to them. So it's a small one. It's just a drop in the ocean. Cannot resolve the problem, but we really would like to find a way to continue to assist all of our members, and including low-income countries.
Thank you, Domenico. I'm sure we'll obviously spend a bit of time today on debt sustainability, as well as the financing of your own institutions and making the best out of the available capital. Leslie, over to you. What is your priority at the New Development Bank?
Thanks, John, and thanks also to DBS for the invitation to be here today. I'd say the number one priority, like for most MDBs and for New Development Bank today, is the mobilization of private sector capital. John, as you know, New Development Bank is only 7 years old, or will be 7 years old in June. We started only in 2015. We've experienced rapid growth over the last 5-6 years, but for us to continue to grow, we need to leverage our capital better, play much more of a catalytic role, and play more of a role to mobilize private sector capital. This has been a focused priority of MDBs for the last few years, and is now gaining more momentum, if you like. If we really want to be more effective in dealing with the climate agenda, the mobilization of additional private sector capital for development is for us, I would say, right at the top.
Okay, thank you very much. Let's spend a bit of time on sustainability. I want to come back to the taxing problem of how to maximize your balance sheets and so on in a little while. But let's find out what the needs are first and how we reconcile them. It's easy to talk about the need for sustainable financing and the support of the sustainable agenda, but any close examination quickly gets stuck on complicated tensions, particularly in emerging economies, between economic development and climate protection, for example. So I want to explore that, because that's quite a difficult headache for MDBs to balance. I'm going to go back to you first on that, Domenico, and then we'll go around. How do you think about at the AIB the sustainable mandate when you're trying to reconcile economic development, which may mean, for example, energy produced in a dirty way, with the need to that we all acknowledge to combat climate change, which MDBs are also assisting? What's your view, Domenico?
Yes, John, my view is that on the sustainability side in particular, I am a bit saddened because, of course, I don't need to go into a complicated geopolitical analysis, but it's very clear in front of us that the events of the last couple of months stemming from the conflict situation in Ukraine are setting us back in the sustainability agenda. I mean, I think that's clearly before us, and we are going back a few years and kind of wasting some of the great progress that has been done over the years to advance the sustainability agenda. I think one of the challenges for all of us working in MDBs will be how to keep MDBs central and as a leading force to continue to support the sustainability agenda. We need to redouble our efforts leading financing into clean and renewable energy, deal with the problem of stranded assets also, which will be enormous also after what we are seeing going on right now in the energy supply chain and many of these changes. I mean, it would be too long to go into, but we are all in the news and we are all following the news. So for me, this is is going to continue to be central, and it's all that I am pushing right now, also in Treasury, to make our efforts and to place also our AIB as an issuer in the capital markets with this strong focus on the sustainability agenda.
Just a quick postscript, Domenico, on your own issuance. Have we resolved for your comfort the standards by which green bonds, for example, should be issued? The European Union is having quite a complicated debate, for example, about the inclusion of nuclear power, and the NGEU is still unable to issue against the EU's own taxonomy, for example. These are very tricky issues. For your own issuance, are you happy that there's a decent standard against which to issue for your own?
Well, first of all, I should say, John, that I am not fully entitled to talk because we have chosen a different path at AIB. We are not issuing green bonds. We chose to go for the sustainability of the issuer. So we linked all our activities to the SDGs, and that's what we report against. And we are now producing the second edition of our impact report, the first one being published last year. So for green bonds, I think, yes, as you mentioned, the decision of the EU was proved to be quite contentious a couple of months ago when they decided to include some energy sources. This is a debate that will continue to go on. We ourselves at AIB are going to soon debate a review of our energy strategy. And these are discussions that elicit very, very strong reaction and different views also, because there is no single standard, to view what is clean or relatively clean. Natural gas is another one, for example, elicits very strong and very polarized views. So, yeah.
Okay, thank you. This has been a long-running debate with supra issuers such as yours about whether to label bonds or to point investors to your credit policies. So that's an interesting discussion in its own right. I want to come next to you, Leslie, on this issue. How are you reconciling tensions between the different parts of ES and G when you consider your lending and the support of economic development, particularly in emerging markets?
Thanks, John. One of the unique features about the New Development Bank, as you might know, is that we're really anchored in emerging markets. The bank was started and is still principally owned by emerging markets. It was started by BRICS countries, that's Brazil, Russia, India, China, and South Africa. The bank is now in a process of expansion, and we had a few new countries join last year, Egypt in particular, Bangladesh, United Arab Emirates, as well as Uruguay. Going forward, we will continue with this endeavor to anchor our presence in the emerging markets. The challenges, as you know, in emerging markets are very unique and different. Now, the multilateral development banking model, as you know, is very much focused on the sort of national boundaries, if you like. Most of our loans are underpinned with sovereign guarantees. About almost 90% of the bank's business right now is really done in individual countries. Increasingly, I think there's a need to look beyond just financing development activities within a country, but also look at the broader sort of climate change agenda, which often requires you to look at it beyond national borders. I believe that there is a significant new focus required of MDBs around financing of global public goods, if you want to call it that, because look at COVID. What COVID has done really, John, is refocus MDBs and also reinvigorate MDBs. In many respects, I think multilateral banks, all of the institutions on this call, played the most critical role in, especially in that initial period when the world was uncertain, what is this global pandemic about and how we should fight it. We were the ones who mobilized significant resources. All of the institutions here, we, for example, mobilized $10 billion over a 2-year period to help our countries fight COVID. So I guess what I'm saying is that our traditional development agenda of building renewable energy, power projects and ports and rail and traditional infrastructure. There's that national agenda, if you like. And then there's the financing of global public goods, which is loss of biodiversity, climate change, global pandemics. I think we need to move more towards a focused approach to deal with the global public goods, because we do not have comparable or other institutions who can focus on that agenda.
But would you accept, Leslie, that there's a tension between sponsoring growth, particularly middle-income countries, and leaning against carbon emissions? Do you see that as something in tension?
I think there's definitely an inherent tension there, John. I think firstly, if you look at where the core global developmental agenda is focused, let's take Africa, where the majority of people who are living in poverty still reside. Africa, whilst it has these huge developmental challenges when it comes to, let's say, carbon emissions and the global fight against climate change, Africa only constitutes just over 4% of global emissions. So if we're saying that the development multilateral banks need to focus specifically on the sustainability agenda, it will direct us away from Africa. On the other hand, if we are focused on the global fighting of climate change, China will be center stage. China is the single largest emitter, 27% of global emissions. But as a country, it has risen, as you know, in GDP per capita terms and in global in economic prosperity over the last 30 years of reform and opening up there. It's now a $15.4 trillion economy. So if we focus on the sustainability agenda, then China would be center stage. I think marrying these two is something that MDBs have to confront today.
Yeah, and we'll come to, we've had plenty of discussions with private sector investors waiting for MDBs to be lead investors in sustainable projects to really mobilize capital on those projects in emerging markets in particular. So we'll come back to that in a minute. Isabel, what's your thinking on the tension between the different components of ESG from the point of view of an MDB sponsoring economic growth or even reconstruction, which we'll come on to later?
Well, I think the G is a given. So I think we can almost ignore that MDBs absolutely at their core are always focused on the governance aspect. So I think that's certainly embedded in the thinking. And I think that we're talking about mostly the tension between environmental and social issues. And I think that's where the just transition aspect comes into it. So it's certainly the case that if we don't address the likelihood that the transition may make existing inequalities greater, that actually we may delay the transition, and therefore really needing to find ways of providing additional support, regional economic development, regenerative policies, looking at labor policies and those kinds of things. They're going to be absolutely critical to ensure that we end up with a just transition where we can focus on the environmental aspects, continue to focus on all the different aspects of environment, not just the net zero objective under the Paris Agreement, but also, and the climate adaptation or resilience aspect of the Paris Agreement, but also on other issues like water, biodiversity, other really major issues, pollution, prevention and control. And I think in some parts of the world, that is even a bigger issue than others from a health perspective and other perspectives. So I think the overlay of the just transition perspective, whilst really trying to continue to move apace with the green transition, and EBRD, for instance, and other MDBs have committed to make all their financing Paris aligned. So I think that all financial flows being Paris aligned and having a perspective, and we've got a MDB collaborative way of approaching this, I think is very important.
On the asset side, so on the giving of credits at the EBRD, would you therefore put the environmental issue ahead of the growth issue, and you're considering any new piece of financing?
I think the two things come together. So it can't be the case that one must be at the expense of the other. And I think that's the aspect of just transition that I'm trying to mention, that we have to be able to focus on a categorical view that we have to see the green transition. So we are definitely looking for that. We have not in any way changed our view post-COVID on the need for alignment of all our financial flows with the Paris Agreement, but at the same time, looking at growth as being critically important for our region. So how can we support that? I mean, there are some things that, you know, are neither brown nor green, and those absolutely must continue to be a source of focus. Our mandate is explicitly about the transition to a market economy where all of our investments must be assessed for environmentally sound and social sustainability. And that was explicit in our charter, which was from 1991. Yeah. So it's not as though we've ever divorced the two. And, you know, inevitably there are some tensions, but it's a process. And I think that's been very important. It's actually at the core of the way that we assess what investments we want to make.
Thanks very much, Isabel. Jonathan, you sit in an interesting region which countries made up of lots of islands that are particularly vulnerable to the impacts of climate change, but also require investment for development and so on. How does ADB think about this tension between sponsoring growth, supporting growth with returns, and safeguarding against carbon emissions, for example?
Well, in a nutshell, it's a big priority for us to promote the transition to clean energy. And so green bonds, climate finance, all these issues have been absolutely critical to our thinking in recent years and for our strategy going forward for the next decade. But when we talk about sustainable finance, let's also be inclusive and bear in mind that the UN SDGs have 17 different iterations, and we've tried to weave these into our operational priorities as broadly as possible. It's absolutely fine to put the spotlight on climate change, but poverty alleviation, gender equality, and various others also important to us. I could say that the budgetary support which we provided to our members over the last 2 years during COVID was not tied to any particular sustainable finance issues. These were basically emergency loans to try to keep the economies above water. But if we do talk about climate finance, let's first recognize that about 50% of global greenhouse gases originate in Asia, and that also 25% of global emissions come from coal-fired power plants. So this is particularly a problem in Asia. You look at somewhere like Indonesia, 62% of their power generation comes from coal-fired power plants, and in Philippines, it's 57%. So very, very high levels. And yes.
So a very long way to go in that region. Just briefly on the issue that Domenico brought up about whether you yourself finance yourself with labelled sustainable bonds or point people to credit policy. What does ADB do in that regard?
ADB's got quite a record in issuing these themed bonds, as we call them. Our first was a water bond in 2010. We issued green bonds since 2015. I think we've issued more than $10 billion worth of green bonds since then. We renewed our green bond framework last year and renewed our second opinion from Cicero also last year because we wanted to include blue bonds for ocean health in the same area. And ADB also issued its first blue bonds subsequent to that.
Thank you. It's very interesting. You sit right in the crux of exactly this discussion. So of sponsoring growth in emerging markets and leaning against environmental problems, among others. So very interesting. Tamer, there's a saying in a Brecht play, "Erst das Fressen, dann die Moral," first eating, then morals. And we all thought that perhaps COVID would induce that attitude with respect to sustainability. What I'm hearing from the panel is that's not true. So if anything, sustainable agenda doesn't look like a top of the market luxury, but is still regarded as a necessity post-COVID.
Yeah, absolutely. And I think that along with the multilateral organizations, what we have seen in the last 5 to 10 years is both the European Union and the Chinese authorities pushing the corporate sector in a decisive manner to pursue the climate transition agenda. So it's not at all a luxury or a box-checking exercise as far as ESG is concerned. Companies, not just in the West, but even in the regions that we work in Asia, are fully aware of the fact that green bonds or green financing will allow them to get more favorable treatment by ratings agencies, by the capital markets, by the regulators. So the incentives are aligned, no question about that. And I think while there are many companies, and I dare say some governments in Asia, who still are quite convinced that there is actually a very stark trade-off between conventional economic growth and green transition. That doesn't mean that the transition agenda is at a standstill as far as that corporate world is concerned or those countries are concerned. We are seeing, even in the most skeptical parts of Asia, decisive move towards issuances and practices being embedded in the corporate culture more than we've ever seen before. But I think the issue that we will struggle with going forward, and I think everybody who has intervened in this panel so far, I think, has alluded to that, is that as far as the countries at the very poor end of the spectrum is concerned, there would be a massive resource transfer needed to carry out green transition for that part of the world. Short of that, we will not only undermine their growth, but we will also undermine our climate change agenda. And where will that money come from? Of course, it has to come from the polluters of the past, meaning the West. And also, a country like China, which I think is keenly aware of its massive carbon footprint, is perhaps the most energetic place in the world in terms of pursuing the climate change agenda. When we talk about taxonomy or the multiplicity of taxonomy, I think it's the Chinese who are pushing the G20 in particular, but also the Europeans to streamline taxonomy, both at the corporate level as well as multilateral level, so that we do have a common language to issue. And I find that encouraging, notwithstanding the recent setbacks around wars and COVID and so on.
Would you say, I wanted to come into that a little bit, but not spend too much time on it, but would you say that there is still scope for global multilateral discussions, including China, having sensible discussions with the US, and you don't see then, Tamer, a bifurcation of the world into regional organizations with different political and economic agendas? What's your view on that, Tamer?
I think having somebody like John Kerry as the climate czar is very important. US, to the extent that, it also is a very big proponent of a flat structure. The fact that, somebody like John Kerry is the senior most administration official and is basically pursuing the climate agenda, I think is very important. So in a cabinet meeting, again, this is the US. We're not talking about Russia or some other country or China. Even in the US, the senior most person's words carry a lot of weight. So if you have the Anthony Blinkens of the world in a cabinet meeting talking very tough about China, Kerry would be a moderating influence in the importance of the US and the China working together on climate change. So I do think that on this issue, there is still significant scope for collaboration, even if there are many other areas of competition and confrontation.
It was interesting, Janet Yellen last week, I think, was inviting China to deepen its engagement with the Bretton Woods organizations. So on that topic, I wanted to come on to money. Firstly, your own, and then also that of the recipient economies. So there's been a discussion about how to about two key themes. One is how to bolster the finances of your own institutions? Either you change the rating structure, perhaps, or you change the rules around capital adequacy and balance sheet on the one hand, and on the other, find ways to mobilize private capital with your help when it comes to the assets that you invest in. I want to talk a bit about that. What's your view on this, Leslie? What should multilateral development banks do to get better use out of their balance sheets to deal with these huge challenges that we've got in the world at the moment?
Thanks very much, John. As you know, this has been a topic that MDBs have been discussing for a good number of years. I would say it's sort of probably climaxed around 2015 at the G20 in Antalya, where a formal communique was released, and then eventually the balance sheet optimization agenda was adopted by the MDBs around 2016. So it's an ongoing discussion. In 2017, as you might know, the G20 had an independent, it was called the Eminent Persons Group, which specifically was looking at the task of what should be done to enhance the efficiency and optimality of multilateral development banks. And then last year, in 2021, a formal task team was set up to review the capital adequacy metrics of MDBs. So this has been an evolving discussion for a number of years. I think, to put it very simply, what COVID has done, this has been one of the biggest crises of our time, as you know, and therefore one has to ask, was that the maximum that we can do as a development finance community in the face of one of the biggest crises that the world has seen in many, many decades? And many people come to the conclusion that surely something is wrong in the context that the additional lending, the additional development resources that we raised and that were made available during COVID is actually less than what was raised in the aftermath of the 2008-2009 financial crises. I guess what I'm saying is you have a much deeper economic crisis, and yet the MDB community only stepped forward to that extent. In short, there is a real discussion today about, firstly, whether we are doing enough in terms of our lending headrooms, whether our capital adequacy metrics are correct, whether the way in which the rating agencies set these capital adequacy frameworks are consistent, coherent, because as you know, you have three leading credit rating agencies, each with their own methodologies that are not necessarily harmonious. In short, I believe that by the G20 this year in Indonesia, a new approach will be forthcoming. The G20 Commission is currently meeting with all the MDBs, and in the next few months, some proposals will come up. My guess at this stage is that a tentative conclusion that is likely to emerge from that process is that MDBs have been too risk averse, that there is scope to do more within the existing metrics without compromising on our high credit worthiness. The final point I'd like to make is that there are some uncontentious things in the MDB community where there's an acceptance that we do need to do more with our high credit worthiness, meaning do more credit enhancement, do more guarantees, leverage more, because the leverage ratios of MDBs are remarkably low given the unique features that we have.
Thanks, Leslie. Dominica, what do you think about this? The SSA world, people 5 years ago would see as a AAA world. A number of sovereigns have already left that behind. Should the MDBs as well?
This is a very difficult question to answer. I think Leslie pointed to the concept that in order to be a successful MDB, you have to operate at the highest rating available on the credit spectrum. So that's a given.
Right.
If you think about bottom line, what is the mandate? The mandate of MDBs is to push change on big themes and to act as a counter-cyclical lender. If you want to lend counter-cyclically, COVID example Jonathan referred to, all of us, all the MDBs have been approving very large packages, financing packages in the wake of COVID. You can only do that if you have the liquidity, in a potentially crisis situation in the financial markets. So as Leslie said, how to better leverage MDBs and how to use better, more efficiently their capital has been the subject of attention since 10 years ago at the G20 Antalya. I would say that something has happened. Some of the credit schemes and the transfer of credits, of risk swap and things like that, but not really, nothing major, nothing really revolutionary. The issue of leverage is a very difficult one because it's one of the main topics that credit ratings look at. Leslie referred to each rating agency having their own methodologies. For example, the latest report I have read is from Fitch rating agencies. It was published on the 25th, 3 days ago only. And they provided an overview of the capital position of all MDBs in the wake of COVID. And the title of the report is about the credit strength of the MDBs. And the subtitle of the Fitch report read, however, their rating might come under pressure if they leverage more. Because Fitch noted that all the MDBs over the past year, in the wake of COVID, they substantially increased the financing volume provided compared to the average of the previous 3 years. So 2017 to 2019, the average is a lot lower than what was approved in 2020 and 2021. So they said, okay, we are happy you do that, but you should not stretch your capital. So this is a very difficult one to resolve.
Just away from your own leverage for a moment, what about taking more risk on the asset side as well? So that's another way that you could stretch your balance sheet. What do you think about that, Domenico?
I think this would be a certainly more effective way for the banks to use their capital, definitely. So to be a little bit less conservative on the risk side and use the large capital and the large liquidity positions to be a leading investor in projects that are not otherwise too bankable, and so act as a catalyst of private capital to come into the project. And I think, for example, EBRD, Isabel, you have done that over the years. In some of the jurisdictions you've been active, to look at innovative products, maybe small equity participation, be a seed investor, to look at projects where you as an MDB, you have the capacity to withstand a higher piece of risk. And if you do diversify appropriately, and if you rely on your large capital buffer, that maybe that's doable.
Okay, thank you, Domenico. Why don't we go then to, I'll come to you in a moment, Jonathan, on this as well, but Isabel, what do you think on this issue, both in terms of changing leverage ratios for MDBs, which would lead to a potentially a lower rating, but as we've just been discussing, taking a bit more risk on the asset side in order to spread capital around a bit more to a wider set of things. We'll come on to crowding in private capital in a moment. But what's your view on the ratings and balance sheet issues there?
Well, I think the AAA rating is absolutely critical to our business model. And I think that it's a false parallel to look at what's happened to sovereign ratings. I mean, one knows that sovereigns have a captive domestic investor base. It's written into bank norms, it's written into insurance company and pension fund rules that they can take X amount of government financing. We don't have that. So there isn't anywhere where it says you must have a certain proportion of EBRD or ADB or World Bank or whoever's bonds. So they may encourage it through the 0% risk weighting and so on, but it doesn't require a certain percentage of investors to hold you. So in the event that you are not AAA, that is going to be very problematic. And I think that there are many different ways in which being AAA has allowed us to operate countercyclically. So when we had the global financial crisis, there were difficulties for many different institutions to continue to fund themselves and lend. MDBs were a flight to quality and could absolutely continue to issue in markets, continue to lend. We increased our lending in those times. The same again for COVID. So when market disruptions occur, we are able to attract real money investors globally. And that has been the way in which we can operate countercyclically. So I think it's absolutely at the core of what we do. And then we price accordingly. So we're able to offer the tightest financing for on lending because of our ability to finance ourselves in this way. And I also think that it's very easy to say rating agencies as de facto regulators are somehow, making rules that are so conservative. I mean, most investors and most MDBs on their own have had capital policies even before the global financial crisis moved rating agencies to look at risk-adjusted capital measures that was saying callable capital is untested. So we don't know how it's going to work. It's not budgeted. It's not there as contingent liabilities in most of the shareholders' areas. So the actual process for claiming it and whether you could claim it from everybody at a time of stress, given the leverage, makes it very difficult. And yet it has been a mechanism by which we have all been able to make significant amounts of investments versus our the amount that was paid in. So if you take EBRD, we've only ever had 5.2 billion euro of paid in from shareholders. We actually moved 1 billion from reserves, so the paid in capital looks like 6.2 billion. And yet cumulatively over the 30 years, we've lent 166 billion to an average single B plus sort of rated entities. So we're taking significant risk. That's on the loan side, as well as making equity investments.
So being a AAA issuer, you think is absolutely at the heart of an MDB business model that needs to stay?
Yes, and I think that it's been an incredibly good use of finance by our shareholders. The amount that we've paid, they paid in versus how we've been able to use it effectively, including countercyclically through crises, stepping up lending as an MDB world, I think has been very powerful and very effective.
Thank you. As well, we've got some interesting audience questions coming, which I'll turn to in a sec. Jonathan, just briefly over to you on whether you differ from your panelists on this question of how to perhaps flex the balance sheet of MDBs, which will make your bonds more expensive to issue, but might make your capital spread further on the asset side. What do you think about that?
Well, look, John, I think you're going to find that the multilateral development banks are going to be circling the wagons over this issue. A retreat from AAA ratings is frankly implausible, in my opinion. We all have very large annual funding programs. For the last 2 years, ADBs was 36 billion annually. This year it's 40. And we seek to raise those amounts at very fine pricing and at with a tolerable debt maturity profile. Right. And of course, our borrowers benefit directly from our ability to raise long-term cheap funding because we have a cost pass-through basis for all our sovereign borrowers plus an administrative margin. On top of that, our loan tenors might be affected, our ability to lend very long. At present, for our ordinary capital resources, the average life can be as long as 19 years, hence a final maturity well into the 20s, whilst our emergency concessionary loans to the least developed members carry maturities of up to 40 years. So we don't want to threaten that. I also feel that the leveraging effect is actually already very strong in the MDB model, consequent to the contingent capital structure that Isabel was talking about. For a sliver of paid-in capital and a large chunk of contingent capital, we're leveraging the donor money from all our developed members into more assistance for the developing world. So what we need to be is, I think, smarter in how we manage our capital and innovative. We can't afford to be complacent. We must be constantly making ourselves relevant to our members and to our clients, whether they're sovereign or private sector. And I'll just highlight one thing we've done quite recently, which is, I think, falls into that camp of being innovative, is in that we did a pilot exposure exchange with the Inter-American Development Bank in 2020 for $1 billion. Now, obviously, ADB and the Inter-American Development Bank, apart from many similar shareholders or members, we don't have an awful lot in common in terms of risk profiles of who our borrowers are. But what we did is we exchanged exposure for that amount, which was based upon 4 borrowers, 4 countries. And this provided capital relief and allowed us more loan exposure for those countries where we were getting quite full. So this is an example of how we have to make ourselves more relevant to members and come up with new ideas and not simply make capital calls. Having said that, I think capital calls are still possible, but again, we shouldn't be complacent about that. We actually completed the 13th capital raising for the Asian Development Fund in 2020. And I think resources are still available, and developing and developed member countries believe in the multilateral model.
Okay, thank you, Jonathan. Tamer, just to round up on this topic, it seems like the idea of playing with MDB balance sheets is easy to say but much harder to do. So the business model of MDB sounds like a pretty delicate flower that might not respond to imaginative pruning. What's your view on this?
I think that the point made by Isabel and Jonathan are well taken, that there has been a shift towards leveraging up. And as the shareholders have pushed these MDBs, they have gone into territory that simply were not explored 10, 15, 20 years ago. So from that perspective, they've all moved around toward the zeitgeist of finance, if you will, that, more toward climate change and more toward SDGs and so on. I think the general impatience that I see from my debt capital markets people who are on the other side of the trade, largely in Asian space, is that, the usual perennial questions, which is, are they too slow? Are they too bureaucratic? Are they too process bound? And therefore, a lot of times, the private sector simply does not wait and just kind of moves on, or projects simply don't get come to fruition because of the duration mismatch between what the borrowers wanted to do and the private sector lenders wanted to do versus what the multilateral was moving at the pace that it could move. So those are, I think, perennial complaints and concerns that one hears from the private sector, but that I suppose is somewhat different from discussing the overarching goal of how to leverage and which sectors to target.
Okay, thanks, Tamer. We're going to turn now to the private sector. We've had an audience question or two in on this. One we've got here: does the ASEAN taxonomy help or hinder efforts to mobilize to attract private capital to climate change finance in the region? There are a whole series of discussions about how MDBs, by being the anchor lender in a project, can help crowd in private sector investors. But what do we think about this standards issue? Perhaps I'll turn to you first on that, Jonathan.
Yes, so how to crowd in more private sector finance. And first of all, maybe I should say that, Tamer, I accept your point about timeliness. of multilateral development bank assistance. So it's not been our finest point, but we excel in other ways, I hope. And to be honest, I think what we achieved and what we contributed in the last 2 years in our COVID response really helped to put the record straight in that respect. In terms of crowding in private capital, we try to do as much as possible, and not just from private capital, but from other public sources, from bilateral or other multilateral donors. Since we run a whole series of donor funds, we administer them within ADB so that those donor funds can lend dollar for dollar against ADB's own assistance. And I think that leveraging effect is important, but bringing in the private sector as well is absolutely key. How we do that and in which areas and which transactions, please bear in mind that we also need to follow the principle of additionality. So if the private sector is able and willing to finance a transaction, the MDBs have no business being there. We need to be there to add something which the private sector can't achieve. And maybe there'll be an ADB or an MDB tranche, which helps to give the private sector financiers comfort in order to be able to go ahead with the transaction. That's a key litmus test for us. I'll stop there.
Okay, thank you. Leslie, mobilising private investment with your help, what are the best tools to do that, do you think? I've heard private sector asset managers and investors talking about waiting for the due diligence to be done, particularly on political risk in emerging markets by MDBs and parts of the Bretton Woods system and so on, and then they'll invest. But as we've just been hearing, and some of the audience questions imply, that can be slow. What do you think about these issues? How do we improve the crowding in and the speed at which it takes place?
Thanks, Don. I mean, I think that as many of the panelists have already sort of highlighted, this is one of the key challenges that MDBs face today. I think one of the first things that need to be done clearly is to enable, and Timur, as well as Jonathan just made reference to it, is to create more of an enabling environment for the private sector and to remove some of the existing obstacles. One of those obstacles you made reference to, which is around standards. What we have today, we still have a divergence of, let's just take ESG, for example. Each of the banks have their own unique frameworks around ESG. Just by starting simply within the MDB community, before we even look outside, to have a sort of more harmonized standards will enable more co-financing with the private sector. Because for an individual institutional investor, it is quite complex to go into a financing syndication if ADB have their own policies, a new development bank, Asia Infrastructure Investment Bank, and so on. So I think making sure that we work towards greater harmonization of policies, and policies on all regards, not just ESG, policies on procurement and so on. There is scope and space for MDBs to simplify and to also, as Timur mentioned, to reduce the sort of administrative bureaucratic processes in doing our due diligence. So the speed of decision making, efficiency of our organizational processes is certainly one. Harmonization of standards is another. And then thirdly, making better use of some of the more effective instruments for mobilization. One of them is use of guarantees. Guarantees only constitute, John, surprisingly, just around 5-6% or so on average of the entire MDB system as a financial instrument that have been utilized, and yet guarantees are responsible for close to 40% of the amount of the funds mobilized. In other words, we need to relook at the role that MIGA, for example, is playing. MIGA, as we all know, is the multilateral guarantee agency within the World Bank Group, but there is scope and space for MIGA to play a role within the entire MDB system. This, again, it's not a new idea. It was something that the Eminent Persons Group raised in the 2017 report. So I think the idea of making better use of new instruments, especially guarantees where we step in with our high creditworthiness and make it possible for the private sector to come in having improved the risk return profile, something that especially IFC and EBRD have done quite successfully.
Leslie, we've had a question about exactly that from my former colleague, Danai Kyriakopoulou, now at the LSE, on MIGA. I'm just going to read it because it is an intriguing thing that's worth the audience hearing about and considering. As you mentioned, MIGA is helping to take on risk from the MDB system with a system-wide risk insurance platform. How might that work and how can it be scaled up?
Well, MIGA, interestingly, is an entity without a credit rating, but it operates within the sort of AAA umbrella of the World Bank group. At the moment, it provides sort of partial credit guarantees, political risk guarantees, but within that World Bank framework. The first thing is to look at it not just as an instrument of the World Bank, if you like, but looking at it as a collective enterprise for the entire MDB system, right? That's point number one. Point number two, MIGA could, for example, play a greater role to do credit enhancement, and that is indeed one of their products. In other words, they could credit enhance, because most developing countries, as you know, are typically today having come down the credit spectrum, sub-investment grade. So making better use of that credit enhancement capacity is something to be looked at. When you look at the size of MIGA, given the small amount of capital that has been put in, there is scope to make it so much bigger. And the use of insurance products, risk-based products, there's a lot of innovation that is possible there. Again, a number of these ideas were captured in that 2017 report of the EPG, and I know that is currently being spoken about within MIGA and the World Bank Group.
Thank you, Leslie. Tamer, just listening to Leslie on that, I had, and forgive me, a slightly queasy and cynical feeling about this, because it reminded me of the monoline insurers that went bang in the middle of the securitization disaster. They had very high credit ratings, actually, but still blew up. You could see the pitfalls of the structure that has just been described, Tamer. Would you agree, or do you think it's an excellent idea to accelerate the use of capital in these institutions?
So I think, again, depends on the urgency and the sort of the paucity of alternatives. And I think that's where, I go back to the point that Jonathan was making, that, you need to underwrite risk if there's a market failure. You don't need to do it if the private sector has incentives aligned to finance that activity. If we are going to find, whether it is with respect to pandemic management or the fallout from the global inflation wave we are seeing, that there is genuine distress in the markets among sovereigns, which simply cannot be addressed by private sector funding, that's where I think comes in issues related to innovative solutions, risk being underwritten by the private sector, public sector, or the MDBs, or coming up with structures that are useful. I think this is where the question of duration comes in. I think as far as short-term immediate crises are concerned, I think the multilateral organizations are very well equipped. It's in their DNA to step in like paratroopers and plug the gap that exists and put out the fire, to paraphrase Michel Camdessus back in the late 90s. But as far as something that is a little more longer duration, a little more nebulous, like climate change, I think there are avenues for innovative structures and securitization, because it seems to me that conventional economics and finance simply is not cut out to solve the intractable, knotty problems that we have around climate change.
Okay, thanks, Tim. Isabel, what do you think about unrated insurers writing credit guarantees to speed up capital deployment?
I'm always very nervous about guarantees, and I think it may be because of an EBRD specific perspective on looking at transition and additionality aspects. So, and sound banking overall. So before, I've been at EBRD for 25 years, I think it is now. And before that, I worked in derivatives in private sector banks, and we used to strip guarantees all the time. And I've still seen the stripping of guarantees. So I think it's very difficult to assume that this is something that is really easily workable. And I think that the other thing that it does is it focuses on the sort of combined of the two, but it doesn't mean that the entity will necessarily be able to continue to issue afterwards. So what I like is where we've got an ability to look through a project and say, these are the different bits. So we've had projects that we've done with MEGA where we did a hospital project where MEGA were looking at certain aspects of the underlying risk in the project from a country aspect. We were looking at the plumbing and looking at the liquidity aspect. So if there were delays, if there were convertibility issues in this hospital project, actually what EBRD could do. So all the effective guarantee aspects were done underlying, so substrata. So then the issuance got higher rating as a result of it because we were doing that insurance, but it's completely unstrippable. And I think those are things that are helpful in ensuring that the focus is on the project itself, it's focused on the issuer itself, but we are just facilitating things that then don't trip up. And I suppose that's always been my concern with guarantees, that they're very hard to price correctly. So trying to ensure that you've got accurate pricing. So I think it looks often like the sort of easy reach. And we often hear that it would be easy to do. I find it difficult. Securitization, I've never felt very comfortable with, unless it looks very sort of cookie cutter. So, we can very easily describe what mortgages are or car loans are or other things are, and you can group them together because it's very easy to give sufficient information that allows you really to understand what things are. But I think when it comes to corporate loans and other things, I think that it's much harder. And I was thinking also back to the time pre-global financial crisis, for every €1 EBRD lent, it could attract €4 more. And that's not through guarantees and not through other things, but the fact that it did the due diligence, which apologies for the time that does sometimes take and that it's protracted, but that we're able to oversee, that we have preferred creditor status, that we have really the ability to drill down in ways that others don't and monitor projects that don't. That changed post-global financial crisis, partly because loans to the real economy got hit in the same way as securitizations and other things. You have the net stable funding ratio, you have other things that really discouraged banks from being able to participate in the way that they had before. And we found some new players, we found insurance companies and others that are able to do things. It's quite difficult though, a lot of the time, because if the average loan size is small, instantly people think, I don't want to get out of bed and try and do all this analysis for something so small. Then people reach for securitization, but I think it's very difficult to give sufficient understanding to the private sector to get them involved when you're lumping together very, very different things. And I think that's my concern.
Well, it went wrong before. I mean, it was re-regulated, of course, with skin in the game regulations. But there's also, to go back to the DLT point we started with, perhaps the issue here is information rather than money. If you can provide accurate information on use of proceeds that flows through the system, maybe there'll be fewer pitfalls. Dominica, we haven't got much time. If I wanted to quickly come to you as well on crowding in. What your views on how best to do that, and also this issue on bureaucratic processes. It must have been said forever that processes in MDBs are bureaucratic, and I wonder if there's a good reason to believe why that might suddenly change to solve these problems. Over to you, Domenico.
Yes, what we have been doing is concentrating on two fronts. First, for AIB, AIB is called Asian Infrastructure Investment Bank. And so one of the fronts we've been acting is to try and make sure that we work towards transforming infrastructure in an asset class. So we've been trying with a few initiatives like launching funds, bond funds, where we work together with fund managers to create products that eventually further down the road may be open to private investments, and these buy assets that are in create Asia exposure in infrastructure. We're also made sure that we are talking to a lot of market participants, infrastructure platforms, potential issuers, to create initiatives where we could facilitate the creation of, again, new assets that are focused on infrastructure. For example, ABS that repackage infrastructure risk in Asia, and being able to issue those and have marketplaces to trade those. So these are few projects where we are working on. The jury is still out. We will see to what extent we can be successful in this field. And the other angle is instead to be, as an MDB, focused very significantly on private sector directly. MDBs, most of them, some are focused exclusively on private sector, but the majority of MDBs, they work extensively with sovereigns, and so do we as well. Yep. However, we also have a strong focus on the private sector. And so many transactions that we look at and the sponsors that we look at is typical private sector projects, projects that commercial banks would look at, and we work together with them. We have a syndication business in AIB. We very often work with commercial banks, and this is where the process comes in. Some of these deals, yes, MDBs may be cumbersome, maybe not super timely in the way that they deliver, but if you are in the private sector, to rely on the ability and the competence of the MDBs to guarantee the standards in procurement, adherence to policies and to restrictions, it's another layer of security for the private sector investors, which may lead them to be more comfortable in coming.
Exactly. If you do the due diligence, it saves them having to do it.
Precisely.
Your bureaucratic process is actually part of the offer.
Precisely.
So, okay, I'd like to give the final word to you, Tamer, and again, thank you for DBS for hosting this. What I think I'm hearing, so the focus on sustainability has not been diminished. Perhaps it's been enhanced by recent crises. I'm hearing a broad open-mindedness on financial techniques, provided they don't jeopardize the credit rating of these institutions. Any other thoughts from you on what we're learning about what's going on in MDBs' minds at the moment? Over to you, Tamer.
Thanks very much, and it's been a fantastic panel. I learned a lot, and it was great to hear from different angles, all the way from Manila to London to various parts of Europe. It's great, but I think just to sort of echo Domenico's final point, that there is a burden sharing here, right? There are certain standards and guidelines that the multilateral institutions, formerly IMF, it try to adhere to are something that sometimes do not match the duration needs of the private sector, but they serve a very, very useful purpose. And I think it's okay. There's certain times, again, we're talking about market failures, and therefore that has to be addressed through perhaps sometimes time-consuming, perhaps sometimes cumbersome processes. But if there was no market failure, there will be no need for the MDB, at least in theory. So I think it's all good. I think
thank you very much. Thank you all very much for joining us and listening in today. Lots and lots of these institutions to do. I've heard it predicted many times that they are no longer necessary, but every time it's said, something comes along which shows that they really are. So good luck to you all. Huge work to be done. And certainly everywhere we talk at OMFIF, a willingness for public and private sector to work together in all fields, I'd say. So I think we've reached, in many ways, a good equilibrium in that discussion. Thank you all for taking part, excellent panelists, and thank you all for listening. See you next time.
Thank you. Bye-bye.
Thank you very much,
John. Thanks, everyone. Bye-bye.